Okay, good morning, everybody. I'd like to welcome you all to the Daily Energy Markets podcast. It is the 1st of March. We are edging towards the end of the first quarter and officially, apparently, meteorologically, officially the first day of spring, at least in the Northern Hemisphere. So I'd like to welcome Osama Rizvi, Energy and Economic Analyst, Primary Vision Network, Peter Maguire, CEO of XM Australia, and Jose Shalhoub, LATAM Consultant at Venergy Global. Thanks so much, everybody, for joining us on this Friday. Peter, let's start with you for a bit of an overview from you on the outlook for commodities in general. I don't want to just limit it to oil, but let's have your oil take there. A lot of people we're talking to in the last week are saying $80 is a safe average for the year. You know, people are being sort of quite confident that we're not going to see too much volatility this year. Give us your take on that and why, and also I'd like to hear from you about base metals and where those are going.
Absolutely. Well, thank you. I mean, when you're looking at the scheme of things, as far as we're 2 months in, Diala, and happy first day of autumn from Sydney, Australia.
Yeah.
And I hope that you do have a lovely spring. We've got 10 months to go till the end of the year. So it's quite easy to say, well, let's just see where it sits. But there's, you know, when we build on what we saw in the last couple of months of 23, geopolitics, and certainly wild swings as far as price, then one can't say that, you know, the next 10 months are going to be even keel and $80 is where we're going to sit. I think we could see some very volatile times. I feel as though when you're looking at it geopolitically, I think it's even hotter this year in the last 2 months, or certainly in the last matter of days, compared to where it was really in 23. So the storyline hasn't changed. The NATO, what's going on with Russia, Ukraine, that's just one little part of it. There are so many different moving parts. We've got droughts in Panama. We've got the issues as far as around the end of the Red Sea, and the Gulf of Tears and the Gulf of Grief. So as shipping and all of these factors can greatly impact price, we all understand how quickly it can change the status quo. Also, you've got really an out of control equity market that just seems to be rallying stronger and stronger week on week, month on month, which is that fear of missing out. You've got a Bitcoin market that is just absolutely on fire, nearly touching 65,000 in the last couple of days. And considering where it was a month ago or even a year ago. And then you're thinking, so there's plenty of volatility in the market. That's telling me there's vol. And then the second part of it is you've got what's happening as far as rates, interest, concerns globally, whether central banks are going to be knocking them back, or the inflation story that certainly hasn't gone away when you're looking at the likes of the inputs of rent or food or services or the cost of fueling a car. So if you strip those out, it's still very, very high. So then the base metal story, many have been crushed, some as much as 30, 40, 50, 60% in the last year, some of those metals. And that just doesn't seem to be on a clear runway as far as aluminium, lead, nickel, zinc, tin, copper. They seem to be languishing on global demand. And, you know,
China demand mostly? Is that, can we attribute that to China mostly?
Well, you can attribute it to China for the first part of it, but the second part is internal demand is weak internally in China. That's what the storyline is. But certainly the global appetite is weak from exporting those finished products. And you've only got to look at the powerhouse of Germany that's crushed. So Germany should be giving stimulus, and they're having austerity. So it's going to be a tough, bleak year for any producer, be it commodity turning base metals into finished product. And who's going to buy them? That's the issue, Diala. So, yeah, I think it's going to be a tough, hard this quarter, naturally, and the next quarter or two for base metals.
Okay, thanks, Peter, for that. Yeah, so lots of volatility to be expected then. And yet, as you said, equity markets volatile in the sense that they're going beyond what people would have perhaps expected. Osama, good morning. I haven't talked to you since the elections took place in Pakistan. Unfortunately, I mean, I'm not too privy, but tell us your take on what's happened there. Again, you know, Imran Khan's party missed out, unfortunately, and a coalition was brought together. What impact is that having on the economic sentiment in the country? Would the alternative have been more positive from an international perspective of IMF, etc.?
Yeah, that's a very interesting question, Dale. I think, first of all, in terms of the elections, there were some good things and there were some bad things. The good things were that lots of people came out to vote. There was a huge turnout of women voting as well, so that's really good. That's really progressive. The youngsters were out. People weren't expecting, after all, there were a lot of political maneuverings before the elections, so things were a bit dangerous as well, fickle, volatile, and in such an environment we were expecting a lot of issues, but gladly they didn't happen. On the negative, or on the downside, I believe that there was a lot of rigging, there was a lot of manipulation of the results, which sort of lingered on the current political instability, and that is certainly going to have a huge impact on the economy. You see, there are three or four main challenges, and this would have been the same if Imran Khan's government would have come, or this coalition, or some other government. The first one is solving the cost of living crisis in Pakistan. We were just talking about, before the recording, we were just talking about the extremely and insanely high electricity bills that we received last August. And recently, there has been about, uh, you know, 10-15% further increase in electricity prices. So we're looking at a huge electricity bill spike in summers. There is inflation, there is food inflation. The second challenge for the new government is getting on another IMF program, because Pakistan has to pay around 80 to 90 billion dollars in the next 3 years. And we're not going to do that by increasing our exports or anything like that. We have to get on another IMF plan. So that is the second priority. But and this is the third point. If we do, then we'll have to implement some austerity measures. We all know, what IMF wants. Whether right or wrong, it's a different debate. But so austerity measures are going to be unpopular in nature. They're going to involve some price hikes. They're going to involve some subsidy cuts. And that is why it is going to be really tough for the government to hold on their political capital for the next elections as well. And even internationally, the geopolitically charged world at the moment, we have 3 to 4 fronts, open fronts at the moment. And I think it's going to be really, really difficult for policymakers to purchase oil and gas and LNG and coal, and that would have a real time impact on Pakistan's economy and the common man.
Okay, thanks. I'll get back to you about the specifics of purchases of energy for Pakistan and India as well. We'll talk about. Jose, nice to see you. Good morning, or yes, it's good evening.
It's
actually.
good morning.
Yeah,
Really,
very early morning. Yes.
early morning.
Great to have you with us. Let's talk a bit about elections, and from the sense of how that's going to impact, obviously, Venezuela and U.S. relations, and in particular the extension of this oil sales reprieve, which expires, I believe, in April. But all we see now is Venezuelan politicians not even agreeing on a date for the elections, let alone what the outcome is going to be. So how is that impacting, do you think, the thinking in the US in terms of oil exports for Venezuela?
Thank you very much. Thank you, and my pleasure. Well, yeah, definitely Venezuela again faces another year at a crossroads of elections, and practically the people are seeing what could be the potential result of all this because of all the political maneuverings that the government is doing, banning the most prominent and the most iconic opposition candidate that resulted out of the recent primaries election, choosing Maria Machado as the opposition candidate, who has clearly the majority of the votes in the opposition, regardless of there's this other group of co-opted opposition parties that the government recently signed an agreement with these parties and candidates. There's around 10 different candidates from these opposition parties, kind of aligned with the government, but not siding with the proposals of Maria Machado, who has been traditionally proposing radical arguments against the government. So this is why the Maduro government decided to ban her from these elections. My call for this year, in terms of the sanctions scheme and the sanctions easing program that the Biden administration decided against the Venezuelan oil sector in exchange for potential political freedom, in exchange for the lifting of the ban against Maria Machado. For me, despite all these recent events, the Biden administration will leave these sanctions easing scheme until elections in the US, because it's kind of convenient for the US to try to drop gasoline prices, to keep gasoline prices low, because also we have seen the Venezuelan oil production rising slowly but steadily in the recent months, primarily because of the help of Chevron in Venezuela, who decided to stay the course and now has been participant in the recovery of oil production here in Venezuela, now hovering around 900,000 barrels per day.
And do you think we should expect new entrants into that space, or that's not going to happen? Not enough confidence for new investors.
Yeah, the government has been moving in terms of any potential scenario of snapback, sanctions snapback, because we have seen also recently the president of PDVSA, the state-owned company, traveling to different countries, meeting with different actors, receiving the Iranian oil minister recently. Now he's attending the Forum of Gas Exporting Countries event in Algiers, recently having met Spain, the Repsol oil company authorities in Spain. So also having received the Russian foreign minister in Caracas. So it's preparing for a potential scenario of snapbacks of sanctions, so, but I think, in my opinion, it's not going to happen. I mean, we are kind of returning to some different sanctions scheme mechanism, but not directly targeting the Venezuelan oil and gas sector. I mean, it's not convenient for Washington, not currently.
Yeah. Not currently. And we had somebody earlier the week saying that also, I mean, maybe it's a minor point, but there's a big new refinery opening up in Mexico, which could also draw in some of that sour crude. And obviously the US wants to keep its supplies and gasoline under control. Peter, let me go back to you. Let's just to focus back into so the mood, if you like. And we've got this higher for longer rates, 5%. They may drop a little bit later this year. That's already factored in, but they're pretty much staying where they are. And yet we have still a confident US economy, and yet we have oil only at $80 and all this geopolitical stuff. So is it the financial players in the oil market that are keeping things suppressed? Their confidence and sentiment is just not as positive as perhaps the physical situation might be, or might be forecast to be, seeing as GDP is looking pretty good in the US, etc. I mean, again, how do we see the oil price maneuvering between those two sort of players, if you like, in the market, financial, physical? You're on mute, Peter.
The other side, I think we've got to move and think about this, Diala, as well. Even though we've got hostilities around the world, there's no real geopolitical war premium built into price at the present time. That's escalated it up 15, 20 bucks a barrel or more. So that's been stripped out. So that's where it's holding at this sort of level at the moment. As you mentioned, yeah, I mean, the GDP out of the States versus what you've got in Europe and what you've got in UK and other parts of the world, America is performing, there's no doubt about it. It's performing very well, but you've got jobs growth, but you've also got a lot of downsizing. Of course, companies aren't hitting targets or budgets. And when you strip out the 6 or 7 companies that make up about 30% of the S&P 500, the Magnificent Seven, then you've got a lot of companies in that. If you look at the Russell 2000 across the spectrum of that's a far broader index to review. Small to medium-sized enterprises are really under the pump. They're not hitting targets, and they're downsizing, and they're really Spotify's losing 17% of its workforce, just for one example. Levi's, there's a host of them. So here comes the next part. While these companies are starting to downsize and people are saying, well, they're having difficulty meeting the power of their wallet and their purse through inflation, cost of living, those pressures haven't been, there's been some comfort or respite with the current range as far as crude prices. But if it was to escalate and jump up to, that 95 to 100 to 105, it'd have a great impact very, very quickly on, again, naturally inflation, and the second part of it, the affordability to live, services, cost of food, you name it, everything just ratchets up. So this is the dilemma that we've got at the moment, that the people are pretty well tapped out. You've got credit card debt at all-time highs. People are really troubling and having a lot of problems trying to make ends meet. And, you're in Dubai. I was there the other day. Inflation, cost of living is sky high there. It's across the world. And it's certainly very expensive here. The average in Australia, I understand, rents have gone up from about 720 to about 1,015. That, $300 increase in the last couple of years. That's enormous pressure that it puts on pay packets and for the survival of family units, Diala. So, yeah, all of these conditions need to be absorbed. And, at the present time, there's structural weakness with austerity in Germany and the Eurozone. Yeah. There's structural weakness in many parts of the world with China, of course, and in certain pockets of Asia. So it's not that, it's not a booming global economy. It's far from it. And many people are saying that you're going to see possibly a correction before the election. And that's where we're sitting at the moment. I think 24 is going to be a year that's going to present a lot of quite incredible activities over the next couple of months.
Hunker down and hold tight, everybody. Yeah, it's quite worrying, isn't it? Osama, let's go back to you and talk a bit about Pakistan and talking about inflation, but also, gas. What isn't inflated at the moment are gas prices. They're, global gas prices, let's say. Is that proving to be a bit of a respite for Pakistan? Talk us through that in terms of, you started by talking about electricity bills and power, and fuel for that. But is that proving, like for Europe, Europe's pretty comfortable right now with gas, isn't it, as well? And as will the rest of Asia be. So give us your take on that.
Yes, interestingly, it is proving a respite for Pakistan. But what is happening here is since 1992, the domestic gas production has been falling, decreasing. So Pakistan, a cash-strapped country at the moment, we just averted a default last year in an IMF program. We are not in a position to take a lot of advantage from the low gas prices, because even if they are lower, we still have to import them. And that means we're going to use dollars or euros for that purpose. And Pakistani currency, the PKR, has almost depreciated around 300% in the previous 6 years. So that is insane, right? So no matter of price fall in gas prices or oil prices is going to be really beneficial for Pakistan until and unless we have some backing from the domestic production. That is why I'm saying, interestingly, gas prices have been falling across the world, but in Pakistan, we just registered a 45% increase in gas prices here. That has never happened. That has never happened. Consumers always took the gas bills for granted. They were in the low hundreds or lower thousands or something, very affordable for everyone. But now they're getting nearer and nearer to the electricity bills. Not at the moment, but in the few years they will be. That is because the absence of the domestic gas production. So no matter, the gas price is going to really benefit Pakistan, but how much? I don't think a lot. It can be, if you compare it with the worst case scenario, yes, but I don't think it's going to benefit the common man, as it is supposed to be.
Okay, thanks, Osama. Jose, let's go back to you and talk about the region in general, just to sort of zoom out a little bit from Venezuela, look at LATAM. Again, we're just mentioning US dollar, etc., inflation. What's the prospect there, do you think, for the economies? And you're looking at Brazil, that's doing very well, relatively speaking, much more stable. Its oil, obviously, trajectory is very positive as well. Guyana, but from a sort of global south, in the West, if you like, Western global South, the outlook for economies. Peter's painting a pretty scary picture there of the volatility and what's to come. Could South America, LATAM, be looking more stable than the rest of the world for any reason?
Yeah, well, it will much depend on the politics in the region, because traditionally politics in different countries in the region trump everything, you know, obstacles, put different hurdles to everything. And considering how South America is a very rich region in commodities, especially in these rare earths and minerals such as lithium, such as copper, such as zinc, such as silver. So definitely it will be a very important year for South America. One country to key to watch and
Do you
monitor.
see, sorry, you just mentioned the metals there. How is the FDI looking into that particular sector, given the political instability?
Yeah, well, you know, the key, the key element here is China, how China performs in terms of demand, because China has been traditionally positioning in the last decade or so, having a different political landscape in South America, unlike the one that it's existing right now, turning to the right in different countries, such as Argentina, for example. Argentina is a key country to watch after the arriving of this Javier Milei, this libertarian guy in Argentina, how he performs his different proposals, radical proposals, in terms of the dollarizing the economy, getting rid of the Argentinian peso, getting rid of the Central Bank of Argentina. So how the Argentinian economy will perform, and how his proposals and his policies in terms of the developing and continue developing, especially the dead cow gas, shale gas field of Vaca Muerta, for example, or the lithium reserves in the country as well. So for me, Argentina is a key country to watch. Also, aside from Venezuela this year, Guyana, as you said, Guyana is another. That's the hotspot currently in South America. We have it close to Venezuela. And Guyana has the biggest challenge in not to repeat the mistakes that Venezuela has been carrying out in the last decade or so, not to fall prey to the nationalism of the resources. For a country that has less than 1 million people, is sudden resources and riches from oil. So definitely that's the landscape.
It's like a Qatar scenario, but for oil there, they have a big opportunity. There's our survey question for the day, which is talking about the US consumer confidence specifically, and these higher for longer rates that Peter was talking about earlier, in terms of how that might start to kick in to consumer confidence, to corporate confidence, I suppose, and the reality on the ground. So when will we see that really start to kick in this year? Which quarter? Because last year it could be argued that it only began to creep in. Sorry about that. Peter, Jose just mentioned dollarization. Should economies be looking to dollarize or Bitcoinize? In terms of the outlook for the dollar, medium term, not short term outlook, medium to long term, in the year or two ahead. Give us a bit of a perspective for you, whether you're in the camp of, yes, it's down from here, albeit very gradually for the dollar.
Well, I think in the short run, certainly over the next matter of months, I think that the US dollar will probably hold its ground against, if you're looking yen, have a look at the appreciation. You've seen 6% against the yen this year. So it's in 2 months. The yen's been crushed, yet you've got the Nikkei 225. I think it's going to hit through 40,000 points today. So, it was 8,000 after it crashed that's a long time back, but it was last time it was at 39,000 points, was in 89. So the Japanese yen, you're looking at the British pound, the pound's under major internal demand in the UK is bleak. The economy is pretty shot, and GDP, if you're looking at it rolling over the last, say, 16 to 18 months, it's really been in recession all the way through. So that's a debate. It's had little blips up and continued downdraft. If you're looking, as I said, a US dollar, I feel as though that'll probably have a bit of a run up from here, quite simply because of rates and quite simply because of policy. So I can't see that there's any pullback from, we were saying March, it's now pulled back to June, then to July. Some people are saying you might see a rate cut at the end of August. We'll just have to see how that materializes, Diala. So that doesn't mean that I don't think that the US dollar would come under pressure to the downside. As far as Malayo, I think that's how you pronounce his name, from Argentina, and what his talks are. I mean, they are very radical, and what he's prepared to do, if anyone, as far as central bank intervention and all of these sort of things. So is this the growing theme across the world? There seems to be a level of dissatisfaction, or a level of, we've got 70 elections happening this year, I believe, across the world. This is just quite incredible. And that can change policy statements. So if you look at the United States, that's 8 months away from probably the biggest election in US history, what we'll see. So the counter argument, if Trump gets in, what impact does that have to dollar? Bitcoin. People are saying it's $200,000, $300,000 a Bitcoin. I don't know, Diala. All I know is that it's had a dramatic move to the upside in the last couple of months. It's just been one-way traffic. So I would hope that the US dollar sticks around for a while, a bit longer. But yes, there's many moving parts to the global economy that one needs to be conscious of, and that really impacts naturally dollar and equity markets.
Yeah. You mentioned, Peter, just to stick with you, because you mentioned Japan, and I just wanted to get your thoughts on that. Obviously there's some machinations there on their monetary policy happening, again, slowly but surely. Some positive sentiment on the equity markets, of course. But there's that, people are being cautious there and saying, let's not get too excited. This may not be the turnaround for the Japanese economy that it's been waiting for 2 decades. And others are saying actually that is China going to do a Japan now? And is it turning into a downturn like Japan has had? What's your sentiment about Japan in terms of the trajectory for the next few years? And what would it take for a more positive guarantee, if you like? What does it need to do?
Well, if you're looking at the bond market, let's have a look at that. It's negative interest rates, and they might do something. So there's the first part of it. You might see some move to the upside from the BOJ. Second, if you're looking at the equity market, absolutely on fire. Let's say it's 40,000 points. It wasn't that long ago, it was 25,000. I mean, it's absolute. I'll have a look in a second and see the percentage change that we've seen in the last year, but I think it's around about 30%. If you're looking at, so you can't discount that. You can't say, well, hey, what's happened? But you've got a very weak yen that's sitting now at that 151 sort of handle, and you could see intervention from the Bank of Japan to say, hey, hang on a second, we'll start buying yen again and really just push that down to that 146, 147 handle. That's, again, we're open to debate. But if you look at China, the CSI 300 had a peak of 5,800. It's at about 34 or 3,500 now. That's not a recession, that's a depression. That market was down, the best part from its highs in the last 3 odd years, the CSI 300 out of China, it's probably down the best part of 40+%. And yet you've got Japan up 40+%. So it's hard to get your mind around all these sort of huge numbers that we're seeing, Diala, and the impact it has to economies, interest rates, and naturally GDP.
Yeah. Thanks, Peter. Osama, we'll give you the last word. Just give us a take on, in terms of oil. We did talk a little bit last year about Pakistan's options for oil imports, particularly Russian oil, and how it was sort of wanting to take advantage of the discounts there, but it had the IMF thing also to negotiate. And discounts on Russian oil have become less attractive. But what's the outlook there in terms of the mix of what you're looking and your choices in terms of importing? There's the result of our survey question before I go to Osama to close for us. Q3, so not much seen kicking in the next 3-4 months, but the majority say that they will be kicking in there in Q3. Let's see if not hopefully, that happens. Yeah. Let's see what happens ahead of the elections in the US. Osama.
Yeah, so in terms of the our options in terms of buying oil and Russian oil story, I think it remains the same. In fact, it has further curtailed, because I just mentioned we were in the standby agreement, a shorter-term agreement with the IMF at the moment. It's going to end, and we have to enter what is called the extended fund facility, and it comes with more conditions and more scrutiny and more reviews. So I don't think Pakistan is going to risk being at the precarious position we are at. We're going to risk more diplomatic navigation, more issues on the front of IMF or the US or other things. So the new government, I don't think they're going to look out for other options. We're going to stick with the UAE vendors. Our refineries, I've said it before, needs overhauling before we can accept any other grades heavy store grades of oil. So it's going to be a long-term thing. We should start working on it, but I don't see that happening in the next 1 or 2 or 3 years.
Okay, thanks so much, Osama Rizvi, Peter Maguire, and Jose Shalhoub for joining us today on the 1st of March. Look forward to seeing you soon and have a good month if we don't see you before that. Thanks so much.
Thank you.
Thanks, Tiala. See you guys.
Thank you.